Hi, I am Anna. I come from www.ntvforex.com. Stimulus hopes push European stocks to one-week highs. UK employment picture darkens analysis. http ntvforex.com news ID 6708F0811 2020 8 am. European markets have come flying out of the traps this morning, taking their cues from a positive Asia session, as investors focus on the prospect of a fiscal stimulus deal from U.S. political leaders, along with prospect of a U.S. capital gains tax cut, while setting aside concerns about an escalation in U.S.-China trade tensions. The oil and gas sector is leading the way on the FTSE 100 led by BP and Royal Dutch Shell, while on the DAX carmakers are having a strong session led by the likes of BMW and Volkswagen, on reports of higher than expected auto sales in China in July. Following on from yesterdayâ's numbers from Marriott, Holiday Inn, and Crown Plaza owner IHG also reported numbers that reinforced how badly the hotel sector has been hit by the various virus lockdowns. NBSP in its previous quarter, IHG reported that revenue per available room RevPAR was down 24.9%, as a result of the various lockdown restrictions hammering the travel and leisure industry. While airlines have seen the bulk of the negative headlines, the hotel sector has been hit hard too. Even with half of its hotels in the US, occupancy rates have still been fairly low, down in the region of between 20% to 30%. In June, management said they expected RevPAR to be down 75% year-on-year on the quarter and 52% down on the first half, and this was pretty much in line with expectations at 51.7%. Total revenue on the other hand came in short at $1.25 billion, as it swung to a first-half operating loss of $233 million. Unsurprisingly, management said they would not be paying an interim dividend, until they had a better idea of how the future outlook and recovery was likely to play out. NBSP: the most significant improvements in the outlook were expected to show up in the Greater China region, and this has turned out to be the case, with business slowly returning to normal. With $2 billion of liquidity still to draw on, management have said they are making good progress on delivering the $150 million in cost savings, the bulk of which are set to be delivered by the end of this year. It's been a decent first half for Domino's Pizza, with sales up 5.5% to $628.9 million in the 6 months to June. Profits on the other hand were slightly lower, down 4.6% to $47.6 million, as higher costs weighed on margins. This should not have been a surprise in terms of costs, given that for a while Domino's had to bear the higher costs of a delivery-only service. Bellway Homes also issued a trading update which showed the house builder completed fewer properties in 2020, due to the shutdowns that we saw in April. While completions fell to 7,522 from 10,892 the previous year, the company's order book rose by over $500 million to $1.76 billion. The company did not provide any revenue or profit guidance, due to the ongoing uncertainties around the economic outlook, and also declined to say when it would resume the dividend. Europe's largest online shopping retailer Zalando this morning more than doubled its profit for Q2, generating a $211 million against a $101.7 million a year before. The company reported a big jump in brands using its services, helping drive an increase in revenues of 27%. The number of active customers also rose 20% to 34.1 million. On the economic data front, it is becoming increasingly apparent that the ILO UK unemployment measure is not fit for purpose in the current environment, as it came in unchanged at 3.9% for the 3 months to June. This is despite the claimant count for July rising 94.4k and the headline claimant count rate rising to 7.5%, from 7.3%. More importantly, the latest data showed that another 220k jobs were lost in the 3 months to June, bringing the total number of positions lost since March to 730k. In the second quarter of this year, the number of hours worked also fell sharply by 191.3 m, no real surprise given the total lockdown in April and residual lockdown effects as the economy started to reopen in May and June. While these numbers are quite alarming, that number still doesn't include the millions of people currently on furlough, all of whom may not have a job to go back to when the scheme rolls off in October. Despite this bleak outlook, the pound has held up quite well, trading slightly firmer against the euro and US dollar. Gold prices have slid sharply overnight on the back of a firmer US dollar, and yields, as well as a brighter outlook for stocks. This decline isn't altogether that surprising given we've come off the back of a 9-week rally. Oil prices are taking their cues from the firmer tone for stock markets, as well hopes that US policymakers will eventually do the right thing and agree on some form of fiscal package. Brent prices also appear to be closing in on the 200-day MA, which could well act as some form of resistance on a short-term basis. US markets look set to continue where they left off last night with another positive open, with the S&P 500 seemingly intent on retesting its previous record highs from earlier this year, as investors mull the prospect of a US capital gains tax cut, along with any other stimulus measures. Dow Jones is expected to open at 27,791. S&P 500 is expected to open at 3,360. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.